Good morning. Let's get straight to it. No time to waste on a Monday like this. Friday's session in Seoul was one for the record books, and today we open into a strange vacuum. The US was closed for the holiday, so there is no fresh Wall Street signal to lean on. What I want you to take away from the next few minutes is one idea. Right now, Korea's risk is not coming from the outside world. It is coming from inside our own market structure. Everything else in this deck hangs off that single point. Standard disclaimer applies. This is market commentary, not personal investment advice.
Friday, in plain terms, we opened up about 1%, fell 3.5% within the first hour, and then reversed to close up 5.76, a 758-point range, the second widest in the index's history. Who did what matters here. Foreign investors kept selling. Over 2 trillion won on the day, nearly 20 trillion on the week. Domestic institutions absorbed all of it and more, close to 5 trillion won of net buying. Retail took profits into the rally. The reversal checked every box we watch for a bottoming signal, a touch of the lower scenario band, the session's peak volume at the low, and a long lower tail on the candle. So Friday resolved the panic. It did not resolve the underlying condition, which is the next slide.
This is the single most important chart-free slide in the deck. The US fear gauge sits under 16. Korea's equivalent is at 89. I have run this desk through several cycles, and a divergence of this size is simply not normal. Usually Korean volatility is imported, a Fed shock, a chip cycle scare, geopolitics. Not this time. Global markets are calm. The turbulence is homegrown. Index concentration in Samsung Electronics and SK Hynix, and the leverage stacked on top of them. Practical consequence? We size our scenario bands for a crisis regime. Wide bands, fat tails on both sides. If you trade Korea this week with normal market assumptions, the market will educate you at your expense. The overnight picture is thin by construction. New York was shut on Friday, so the last hard data point from the US is Thursday's session, where semiconductors got hit hard again, down 12% in 2 days on the Meta excess capacity and OpenAI GPU savings chatter. Note that Seoul already priced that in and rebounded anyway on Friday. That is the decoupling in action. The currency is the quiet positive. The won snapped back 30 won on Friday, and the SK Hynix EDR listing brings a large dollar inflow that gets converted into won. A firm currency lowers the pressure on foreign investors to keep selling. Weekend headlines lean friendly for the chip complex. Put together, we expect a modest gap up, but nobody with a mandate is going to swing big the day before Samsung's earnings.
Here is the machinery behind the wild closes. Between Seoul and Hong Kong, roughly 33 trillion won now sits in 2 times leveraged products tracking just 2 stocks. The Hong Kong Hynix product alone became the largest single-stock leveraged ETF in the world this spring. The mechanics are simple and unforgiving. To keep 2 times exposure, these funds must buy after up days and sell after down days, concentrated at the close. Our estimate, about 0.7 trillion won of forced flow per 1% daily move in the underlyings. On a 5% day, that is over 3 trillion won hitting the last hour in the same direction the market already moved. I want to be precise about the causality. The ETFs do not pick the direction. Fundamentals and flows do that. The ETFs turn the volume knob. That's why our bands are wide in both directions, and why my desk does not touch the last hour on big move days. Our probability map, built the same way every morning. Start from the volatility regime, score the overnight signals, then correct for what yesterday's forecast got wrong. Friday's close blew through the top of our band, so today's distribution shifts weight away from the downside and into both tails. Base case, 38%, a wide, nervous range between 8,000 and 8,250 while everyone waits for Samsung. Upside and downside are nearly symmetric at 22% each. And note the tails, 12% to a crash below 7,400, 6% to a melt-up above 8,570. 18% combined tail risk is enormous by normal standards. That is what a crisis regime with a 33 trillion won amplifier looks like. If the market breaks lower but fails to make a new low by 11 a.m. and volume climaxes, history says respect the reversal. Friday was exactly that pattern.
The calendar does the heavy lifting this week.
Tuesday morning, Samsung's preliminary numbers. The consensus has nearly doubled since March, 85.6 trillion won of operating profit. If the print clears that decisively, the crowd of investors sitting at break-even after the drawdown flips from sellers to holders, and the path of least resistance turns up. If it disappoints, we retest Friday's lows quickly. Wednesday's Fed minutes matter less than usual for us. The soft U.S. jobs number already took rate hike fear down a notch. Thursday is options expiry, a mechanical noise day. Do not overread the tape. Friday, the Hynix ADR goes live on Nasdaq with roughly $29 billion coming home. That is a real dated support for the won and for sentiment. One line to remember: Monday is the waiting room. Tuesday is the verdict. 4 rules for the week, and they are boring on purpose. Boring keeps you solvent. First, run smaller and hold more cash than feels natural. In a regime where the index can travel 10% in a day, position size is your only real risk control. Second, trade the levels, not your mood. 79.27 and 74.41 below, 82.50 and 85.74 above. Friday's low landed almost exactly on the lower band. These are not decorative numbers. Third, stay out of the final hour on big move days. That window belongs to the rebalancing machines, and they do not care about your entry price. Fourth, and people forget this one, hedge both directions. The same amplifier that can crash this market can squeeze it violently higher on good Samsung numbers. Missing an upside move you were positioned against is also a loss. Let me close where we started. Nothing about this week's turbulence is coming from Washington, from the Fed, or from a geopolitical shock. It is Korea's own market structure, extreme concentration in 2 stocks, and a mountain of leverage rebalancing against them at every close. For today, expect a modestly firmer open, a wide and jumpy range, and low conviction. The real decision arrives Tuesday morning with Samsung's earnings. Strong numbers, and this market can squeeze higher fast. Weak numbers, and Friday's lows get retested. Until that verdict is in, our advice is simple. Smaller positions, more cash, respect the levels, and leave the last hour of trading to the machines. Trade the market you have, not the one you wish you had. That is all for this morning.